India's mutual fund industry has seen a dramatic shift, a significant shift over the last decade. The increasing popularity of systematic investment plans, SIPs, among Indian investors reached a new peak in October. There's a lot more on the horizon, according to industry experts, who also say from small towns to big cities, the easiest way to get in on the market is only going to get bigger. The SIP is an investment option powering India's mutual fund industry. When India's mutual fund sector marked its half-century anniversary in 2013, the sector had hardly any retail presence. At around the same period, the country's bank deposits were 67.5 trillion rupees. Since then, a great deal has transpired. As a result of continued expansion in SIP accounts, the industry's asset under management, or AUM, has hit a high of 50 trillion rupees in December 2023. SIP's AUM amounted to 10 trillion rupees at the close of 2023. SIP investments have seen an upward swing for the last few years. Monthly investments through SIPs surpassed 25,000 crore rupees for the first time in October this year. The number of SIP accounts also reached a record high. The record-breaking SIP contributions show the resilience of retail investors during a period when markets were on a downward slope. SIP's continued success in India is a testament to the fact that investors in the country have a better grasp of the significance of compounding and methodical investments. And with that, in today's special segment, Your Money on World Business Watch, we are joined by Mr. D.P. Singh, the Deputy Managing Director and Joint Chief Executive Officer of SBI Mutual Fund, to discuss the outlook for India's mutual fund industry. Thank you so much, Mr. Singh, for joining us on WION's special segment, Your Money.
Thank you so much. Thanks for having me here.
So let's get right into the discussion. The India SIP story is perhaps one of the greatest achievements of the Indian mutual fund industry. How do you think this happened, and is it here to stay for long and become even bigger?
Yeah, it will definitely become bigger, because when we look at the numbers, the penetration level of Indian individuals into the capital markets is very, very minuscule even today. If we compare it with the other developed countries, so we are nowhere near that. We are just 15-20% of what is happening in the bigger economies. And we happen to be very shortly third largest economy of the country. And the number of people, our demography is actually helping us in getting into that area in a big way. The trust, the resilience, which has been shown by Indian capital markets over the period, has brought in a lot of trust. And today, the SIP investment has become a household name. I don't think any old individual who is having some surplus to save is not having a SIP. And this is likely to continue. And see, till now, we have been doing it at a very, very small ticket size. The average ticket size, if we talk in the global terms, is just $25 to $30 per month. And this is likely to go to $50 to $60. And once that happens, the volume will automatically grow manifold, in addition to many more new investors coming into the market.
Right, Mr. Singh, SBI Mutual Fund has just launched SBI Quant Fund. It's a first of its kind. I wanted to understand what kind of investor is best suited for this fund, and how is it different from other such funds?
Now, first thing, anybody who is having the conviction that Indian market or Indian growth story is intact, and anyone who is ready to participate in the Indian equity markets, this is the fund for all of them. Because this is not any fund manager biased fund. This is a rule-based fund, and this is the first time that we have launched this fund after a research. The way it happened in the healthcare sector, that you have long period of research. We did on this particular product, we did a research for 15 years. And we have back tested it in the live environment. We tested it for 5 years. And we are very happy that that strategy is showing outperformance on benchmarks in every period, 5 year, 3 year, 1 year, 10 year. It has outperformed. And this fund takes care of the biases which any fund manager will have. And another thing, we are conscious of the fact the cycles are very, very short now. So how to, on monthly basis, shift from one strategy to another strategy, because this fund, this particular fund takes care of momentum, quality, growth, everything is taken care of. There are four say different factors which are taken care of in this factor, and the weightage is adjusted every month. This is very, very good fund for anybody to be into. And if I talk about the category of this fund, this is basically large and larger mid-cap fund, because we are talking about the BSE 200. The portfolio will be created from BSE 200 stocks only, and up to 200 stock, it's the larger mid-cap. It's not the mid-cap kind of thing. It's a large and larger mid-cap. So that's how the fund has been phrased.
Right, sir. And just to understand this better, how does the multi-factor model work, and what will be the portfolio construction strategy for that?
See, there are cycles. Like today, we will have the stocks which are having the growth, which are having value, which have the momentum, which have quality bias. So these are the four qualities. And when we start the fund, we'll see that which particular factor is working well, which is at this point of time. Because we have seen in the cycle that sometimes in the market, the quality takes the precedence on anything else in the market, and sometimes value takes, and there are cycles. So when we start the fund at this point of time, because as I told you, we are all running a live kind of environment, a portfolio of 4,000 to 5,000 crore rupees. And we have worked on that for last 5 years. And whatever will be the weightage at the time of launching a fund, we will give that weightage to that particular fund. And as of now, suppose we talk about the value has taken a little backseat, and the growth has come on in the front. So the weightage here will be 8% plus minus. I mean, if we put 25% to each, so whatever factor is working better, that will having the overweight of 8 to 10% on that particular factor, and the remaining factor will continue, because we don't know when the other factor will start working on. And the whole back testing has been done in this premise only.
Right, sir. And the fund's presentation highlighted its backtesting successes as well. As you mentioned, it took 15 years of research. Can you share something on that as well?
Yeah, I told you that we did it for 15 years and 5 years in the live environment. And what it has shown is that on the 3 year period, on the rolling period also, it has outperformed the benchmark in the range of 2 to 4%. In the 5 year also, it has given the outperformance over 3%. And this is the fund where the fund manager is, I'm not saying it's 100% biases, because ultimately the weightages are to be decided by the fund manager, which the rules have been telling. And see, the outperformance anywhere is at the lower side has been 2%, and the higher side is 5%. But it has never gone below 2%, except for one particular year where 1 year it underperformed 1% on the portfolio. And all the 15 years, it has outperformed the 2% to 5%. And the ranges are now shown in the chart, which has been given in the presentation. But any rolling return, we are quite confident what has happened in the last 15 years may continue. And just because we have seen that the cycles have become shorter now, so we are readjusting it on every month basis. Every month readjustment will happen.
Right, and due to market volatility, many investors are sitting on the sidelines. Should they be doing so? What is your best advice to them?
See, again, I will repeat what I said earlier. If I have the conviction in the Indian markets, and I have already taken a plunge in the markets, I'm ready to take a plunge in the equity market, because equity markets, there are some inherited, we are talking about the outperformance. And the fortunes of any fund cannot be different from the fortunes of the market. So if there's a drawdown of, say, 7%, 8% from here on, the fund over a longer period will give outperformance by having a drawdown of 3 to 4%. So that's what we are talking about. And if somebody asks me whether I'll put my own money, I will very loudly say yes. Whether I'll put my Ken's money, the answer is yes, I will do that, because this is something where I can put money for 5 to 10 years, can do the systematic withdrawal plan, or I can transfer the money on regular basis through systematic transfer plan. I can do SIP in this fund. I will very much do that for my own money. It is not a fund which will give you an alpha of 10% or 15%, 20%. The range of outperformance will remain bound to 2 to 5%. That's what the backtesting has told us. And if we are happy to do with that, I think this is the fund to go for.
Right, sir. And of course, I know you've touched on this already, but I'm sure many of our viewers are still learning about investment and are very early on in their investment journey as well. We were talking about how SIP's continued success in India is testament to the fact that people now perhaps have a better grasp of compounding and methodical investment. With that, in relation to the Quant fund, if there was something that you could tell to younger people who are still early on in their investment journey about some of the key things that they must know about it, what would those be, sir?
To youngsters, my suggestion will always be, see, they have to put in two buckets. Today, the longevity of the investments by the young investor is very low. Generally, we see the cycle is 3 to 5 years, but in case of young people, they are putting it for 1 to 2 years. That's what data is telling us. And this fund is bucketed for that which they want to take care of your medium term to long term goals. If their medium term goal is to have their own venture, maybe in 10 years, 15 years down the line, this is the fund to be where they can create capital. And all their investments need to be bucketed into when, see, instant gratification may not happen in this fund. Instant gratification may still happen in the small cap, mid cap funds, but the risk also is equally higher there. But if somebody is putting money for a longer period, and see, I think this is the fund to be, and one should have this bucket definitely in his portfolio. And see, we are very happy that we are the first fund house to come out with this four-factor fund. There are one or two other quant funds, but they are using only single factor. And the single factor doesn't work for a very long period. The readjustment of factors is something which is the USP of this fund, and readjustment on monthly basis is the USP. And the young investor can definitely put at least, in my view, if I have to give some suggestion to my son, I will tell him 50% to put in this and 50% to be diversified into other funds. That's my call. That's the kind of conviction I have in this particular strategy today.
All right, well, Mr. Singh, thank you so much for joining us on this special segment. It's a pleasure. It has been a pleasure speaking to you, sir.
Thank you so much. Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.